Hello, hello. It is November 27th, 2014, day before Thanksgiving for all the American viewers out there. Happy Thanksgiving. Um, I'm going to do a follow-up here to the video I did a couple months ago. Just saying, basically we're going to be expecting a pretty big market crash here in 2025. Following up because we do now have that signal. So go back and watch the video. I'm going to have it, show up here, I believe. I'll have the link back to it so you can watch the original video. But essentially, when you have a yield curve inversion, meaning the rates on your 10-year bonds are lower than the rates on your 2-year bonds, it's been basically a 100% effective signal that there is a recession coming. The rate curve inverted back here. You can see that's in June 2022. But if you look historically, it's not the rate curve inversion that reliably tells you when the recession is going to happen. It's really the end of the inversion that tells you. And we have that end now. That end was right here, beginning of September. The rate curve uninverted and started coming back up above that zero line. Now, if you look back historically, again, look at my prior video for this, but basically you have anywhere between 3 months-ish, 140 days, give or take, and like 5 months, somewhere around 220 days from the end of the inversion until you get the top of the market. So this is the Dow Jones Industrial chart that I have here. And I have on here now just the date range, basically. From the end of the inversion, we've got 140 days, brings us to pretty much January 20th, 21st, somewhere in that region. 217 days as the outside. Range is like April 7th, April 8th, something around there of 2025. So basically, anywhere between January and April of 2025 is when I'm going to expect the top of the market to be struck. Okay, so this likely to continue upwards a bit. I'm not sure exactly how high it's going to go, but close to 50,000, if not over 50,000 on the Dow Jones seems likely. From there, that's going to be the top, and we're going to begin to see a crash. Now, that doesn't mean we're going to immediately crash at some point in there. These things do take time, but we're probably going to start to see the beginnings of it. We're going to start to see declines. We're going to start to see lower highs being formed, right? And then at some point, there is likely to be a very significant crash that kind of happens all at once and out of nowhere. Well, the mainstream media will say out of nowhere. People like me will obviously have been expecting it all along, but this could be very, very significant as far as crashes go, though, as well. I'm at this point, I can't get a target. We have to see how it pulls back. But there's no reason at all it can't even go back to the COVID lows or even lower, which is from current prices. The COVID low would be a 60% drop. That is not out of the question at all. All right, so that's pretty much it. That's the update there. So beware in that first quarter, 2025, that we are likely going to be topping out here. So everybody, hope you handle your portfolios correctly, move to cash, start taking profits on stuff in that region. That's what I'm going to be doing. You do you, obviously, however you want. But that is what we're looking at. All right, if you found this helpful, you can subscribe to Trade Like a Whale. You get a free 2-week trial period if you'd like. And go ahead back and take a look at the original video I did on this, where I go into a little bit more detail about those yield curve inversions. All right, everybody, stay safe. Happy Thanksgiving.